Did Jeff Bezos just tell everyone to sell their stocks? Did he warn that the entire financial system is about to collapse? You've seen the headlines. The banking system is broken, but what if the lie is designed to hide a much scarier truth? What if the real warning isn't in his words, but in his actions? And what if the proof that the system is failing is already here? We found the truth, and it's not what they're telling you. If you have a bank account, you need to see this. Subscribe now and tell us in the comments, do you trust your bank? The story exploded across the internet. Jeff Bezos, the founder of Amazon, had apparently given the ultimate warning. He told investors to sell everything, signaling an impending crash. This single, terrifying phrase suggests the man who built an empire on economic growth now sees the end of the line. It implies that the insiders know something we don't, and the house of cards is about to tumble. But here is the immediate problem. He never actually said that, not recently. The viral quote is a fabrication, a distortion of much older, more careful advice. What he did say, back in late 2022, was a caution? He retweeted a CEO's warning and added his own comment. The probabilities in this economy tell you to batten down the hatches. Battening down the hatches is not sell everything. It's a call for prudence, for risk reduction. It's what a sailor does in a storm, not abandoning the ship, but preparing for rough seas. In fact, his most recent public comments, made just last month in October 2025, were about the AI boom. He called it an industrial bubble, which sounds alarming. But then he added the crucial context. He said these bubbles are good, a natural part of innovation, just like the dot-com era that birthed his own company. He is optimistic about the long term, even if he sees short-term froth. So, the panic headline is a lie. Bezos isn't running for the exits. But this is where the story gets truly disturbing. Just because he didn't say it doesn't mean the second part of that title is wrong. The banking system is showing signs of being broken. The evidence is no longer theoretical. It's happening right now, in plain sight, away from the dramatic, fake headlines. Let's start with the foundation. The United States national debt has ballooned to over $37 trillion by 2025. This number is so large it's almost meaningless until you look at the cost to simply maintain it. With interest rates no longer at zero, the cost to service that debt has exploded. It's projected to be over $1.2 trillion this year alone. That's money that could be spent on infrastructure, healthcare, or innovation, now being burned just to pay interest. This massive, structural drain puts a permanent strain on the entire economy. It fuels inflation, forcing the central bank to keep rates high, which in turn puts more pressure on businesses and, most importantly, on the banks. We all remember the chaos of 2023. Silicon Valley Bank, Signature Bank, First Republic. They collapsed in a matter of weeks, the fastest bank run in modern history. We were told it was contained. We were told the problem was isolated to a few poorly managed banks that took on too much interest rate risk. The system, they assured us, was sound. But the failures didn't stop. They just got smaller and quieter. In April 2024, Republic First Bank in Philadelphia was seized by regulators. It failed. Then, in 2025, the trend continued. In January, Pulaski Savings Bank in Chicago was shut down. In June, the Santa Ana National Bank in Texas was closed. The FDIC cited suspected fraud in at least one of these 2025 failures. These aren't system-ending events on their own. They are small, local banks, but they are the symptoms. They are the cracks spreading through the foundation while everyone is distracted by the AI bubble. It's not just the small banks, either. The big banks, the ones too big to fail, are showing a different kind of decay and operational rot. Throughout 2024, a wave of technical outages plagued major financial institutions. Customers at some of the largest banks in the world were suddenly locked out of their accounts. Mobile apps went dark, payments failed, direct deposits vanished for hours, sometimes days. The banks blamed software updates or third-party vendors, but the result was the same. For thousands of people, their money was suddenly inaccessible. This isn't a financial crisis in the traditional sense. It's a crisis of infrastructure and trust. The system is literally breaking. When you cannot access your own money, what is the functional difference between that and a bank failure? The fragility is real, and it's moving from the balance sheets to the user interface. This brings us to the third part, the smart money. Forget what Bezos says. Watch what the billionaire class does. Their actions tell the real story. In 2025, a major trend has dominated investment strategy, a flight to quality. This means investors are dumping lower quality, riskier assets and piling into a handful of mega-cap, high-quality companies. They aren't selling everything. They are selling risk. They are consolidating their wealth into assets they believe can weather the storm that battening down the hatches implies. This creates a dangerous divergence. The stock market may look high, but underneath, most stocks are struggling. The wealth is concentrating in a few lifeboats. We also see a move called ring fencing. As geopolitical risks increase, corporations are pulling back from global supply chains. M&A activity is becoming more domestic, focused on acquiring assets within their own borders. This is a retreat from globalization. It's an admission that the interconnected world we built is now a source of risk, not strength. They are building financial walls, and then there's the move into alternative assets. This isn't just about cryptocurrency. We're talking about tangible things, farmland, infrastructure, and private credit. Just recently, financial giants like Schwab have been making major acquisitions to expand their offerings in alternative assets. They are building platforms to give their wealthy clients access to things outside the traditional stock and bond market. Why? Because they see the same cracks we do. They know that a system drowning in debt and propped up by fiat currency is vulnerable. They want to own things that can't be printed. This is the real warning. It's not a quote. It's a massive, quiet migration of capital. The wealthiest are moving their money to safety, while the average person is left holding the bag in a system that is operationally failing. So, what does this all mean for you? This is the final, most important part. The high-level finance and the quiet bank failures have a direct impact on your daily life. The first impact is inflation. The massive government debt and the money printed to service it is a primary driver of the persistent inflation that is eroding your savings. Your money in the bank is losing value every single day. The second impact is reliability. Those IT outages in 2024 are just the beginning. As banks cut costs to deal with a high-interest rate environment, their investment in core technology often lags. The system becomes brittle, but the biggest danger is the one no one is talking about, the foundation itself. The U.S. Treasury market is considered the safest asset on Earth. It is the bedrock of the entire global financial system. In April 2025, the New York Fed released a report. It noted that liquidity in the Treasury market, the ease with which you can buy and sell, had worsened significantly around simple tariff announcements. Think about that. The world's safest market is now showing stress, not from a catastrophe, but from a policy change. It's so fragile that a political tweet could, in theory, cause it to seize up. Central banks are now openly admitting it. Both the European Central Bank and the Reserve Bank of New Zealand published reports in 2025 stating that risks to the financial system have increased. They cite high valuations, market volatility, and geopolitical tensions. This is the official, sanitized version of "the system is broken." The Bezos warning was a lie. It was a piece of clickbait designed to get your attention, and it distracted from the real story. The real story is that the system is already failing. Not in one big, cinematic explosion, but in a slow, grinding decay. It's failing through small bank closures, through IT outages, through persistent inflation, and through the quiet flight to quality of the elite. The warning isn't coming from one man, it's coming from the system itself. The question is no longer if it will break, but how you protect yourself as it does.